Are you looking for ways to lower your mortgage payment? I'm going to give you 4 strategies in this video to help you lower your monthly payment that could essentially save you thousands of dollars over the course of your loan and maybe even tens of thousands of dollars on interest paid on your mortgage. We've all felt the pinch of inflation over the last year. Everything's getting more expensive. Eggs, bread, gas, everything you can think of is costing more and more money. Like most of you, we are probably looking for ways to save some money, whether it be coupons at the grocery store, whether it's points at the gas station, whatever you can do to save a buck here and there, it's going a long way for most of us. So here's a great way to take a look and do an analysis on your mortgage to figure out, are there ways that you could be potentially saving money on your monthly payment? And if this is the first time you're checking out my channel, my name is Seanu Uyehara. I'm an area manager with Geneva Financial, helping you understand the mortgage process and understand the mortgage world. Whether you're a first-time home buyer or a seasoned investor, my goal is to help you navigate the mortgage world and make sure you get the right mortgage. If you ever have questions on a purchase or refinance anywhere in the country, you can send my team an email below. We're happy to help you and point you in the right direction. And if you need to get some financing done, that's what we're here for as well. We can certainly get you pre-approved or look at a refinance, see if we can save you some money. Now, for the sake of this video, I'm going to give you the hack at the end. So make sure you stay tuned to the last part of this video. I'm going to give you something that not a lot of lenders talk about that can save you tens of thousands of dollars on your mortgage. The first thing you want to take a look at is, can you get rid of your mortgage insurance? Now, the downside to having mortgage insurance is that it's on your mortgage and it goes to absolutely nothing. That's the lender's policy in case you foreclose on your home. So it doesn't benefit you to pay it. However, it did help you get into your home when you bought your house up front because you didn't have to put 20% down, or maybe you didn't work with a lender that showed you other strategies to get you into your home without having to pay PMI. Now, the fact that you're already paying it, and depending on when you bought your house, will determine whether or not you can get rid of this fee or not. Now, if you have an FHA loan, the only way you can get rid of your mortgage insurance is to do a refinance. But like this video said, we're not trying to do a refinance right now. So in that case, this wouldn't apply to you. This is for all of you that have a conventional mortgage. So if you have no idea what type of loan you have, take a look at your mortgage statement. It's going to tell you what type of loan you have. You can look at your monthly breakdown in your escrow section, and it should show you that you're paying your property taxes, homeowners insurance, and it should then show you the PMI amount. And sometimes it'll even state whether it's FHA related. So that's kind of where your hint would be if you have no idea what type of loan you have. Worst comes to worst, you'd have to pull your loan documents and take a look and see what exactly you signed for. Hopefully you still have those saved. But those are 2 easy ways. If not, you can always reach out to my team. And like I said, we can try to help you figure out what type of loan that you currently have. So because you have a conventional loan, the one thing that you can do is call your servicer. So this is the company that you've been currently making your mortgage payments to every single month. This is the company you want to reach out to ask them about removing your mortgage insurance. Now, what they may try to do is just flip you over to their call center team so they can do the refinance. However, you want to ask them if there's any sort of programs to help streamline the removal of your mortgage insurance. This may require some digging. This may require multiple phone calls if you don't get the answer you want, but most lenders have a way to do this. I did this on one of my properties many, many years ago, and the process was super easy and very cost effective. I think I paid the cost of an appraisal, so at the time was maybe about $400 or $500. I had enough value in the house and they removed the mortgage insurance for me, which at the time saved me about $180 or so a month. So what you want to do before you even make this phone call is ballpark where your loan to value is. And here's how you figure it out. So take a look at your mortgage statement. You see what your outstanding loan balance is. Divide that by what you think the home value is, which you can take a look at a few websites like Redfin and Zillow. But remember, take this with a grain of salt. The values that you see online are not going to be 100% accurate. More often than not, it's probably going to be a little higher than what your home is, but this gives you a rough ballpark. If you are under 80% loan to value, that means you should be able to qualify to remove your mortgage insurance. If you're 81, 85, 86, anything above an 80%, you don't have enough equity yet. So keep an eye on your properties, and then you can figure out at some point when you can do this trick here. So like I mentioned, then you want to reach out to the servicer and find out, is there a program that they have available to help you remove your mortgage insurance? And remember, tell them you don't want to refinance, because again, they may just try to throw you straight to the call center so they can make some money off the refi. But that's one easy way that's super cost effective, really efficient, and it should be pretty quick to get you out of that mortgage insurance premium. Strategy number 2 is to shop around for your homeowner's insurance. So many times we just get so caught up with our day-to-day lives that we forget to shop around for our homeowner's insurance, and we just kind of leave things the way they are from the time that you bought your house. But like so many of you that probably shop around for your car insurance, maybe every year, maybe every couple of years, you should do the same thing with your homeowner's insurance as well. Now, if you're changing your car insurance, you probably want to get an estimate for your homeowner's insurance as well, because more often than not, when you have multiple lines of insurance with one carrier, they tend to give you bigger and bigger discounts. So if you're moving from Progressive to Geico or State Farm or wherever, take a look to see what would that then save you on your homeowners, because you want to look at the total savings that you can have amongst all of your policies. So sometimes one policy may go up slightly, but maybe one of the other policies you have has a much larger overall reduction. So your net savings at the end of the day is much more significant than keeping policies at different carriers. And plus, most of all, it makes the organization of everything so much easier. And I can tell you, as I've bought multiple rental properties over the years, I always try to go through the same provider just to make my life easier. So that way, if I need something, I call one person, I can get the information. But unfortunately, with some of the homes that I bought, they didn't have coverages through some of the carriers that I have, and I've had to go with someone local, which it ended up working out, but now I've just got to remember every single place of where I have policies at. So shopping around for your homeowner's insurance is a great way. Again, you don't have to refinance. It's just a simple phone call that you can make to get the information you need so you can shop your premiums around. And once you make the change, the insurance company handles everything for you. So you don't have to call your lender or notify me or anyone else. They will take care of it for you, especially if you have an escrow account. They will do all the work to make sure everything gets updated, and that way you have no lapse in coverage and everything is going to be peachy keen. This next strategy is not one of my favorite strategies, but it is a strategy, so we're going to talk about it. This is a loan modification. So if you're thinking about doing a loan modification, this means you're probably struggling with your housing payment as it is, which is not a good sign. However, do not wait until the last minute to make a decision as to what to do with your home. I've seen way too many people in my career have too much pride, not ask for help, not seek out help, and literally have houses gone into foreclosure, and they've thrown away tens of thousands, sometimes hundreds of thousands of dollars of equity because they weren't even thinking straight. And this honestly is such a tragedy, because even if you've been in the house for 5, 10 years, however long it's been, if you've built up that equity, you want to at least capitalize on that. Even if worse came to worse and you got laid off from your job and you just could not make ends meet, at least you could do is sell the house. Don't let it go into foreclosure and let some investor come and buy the house realizing that you didn't know what you were doing and you literally threw away all that money. But sad to say, that stuff happens every single day. So if you get in a pinch, and we're starting to see that across the board, people are getting laid off more and more these days. Credit card debt is continuing to rise, and our savings rate as a country is continuing to go in the wrong direction. If you're getting to a point where things are getting tougher and tougher, you have to reach out, whether it be to your loan officer that helped you or your real estate agent that helped you sell your house, because you want to figure out ways, how can you stay in the house as long as possible, maybe get back on your feet so you don't lose the property. But a loan modification is a great way that you can contact, again, the servicer. So this is the company that you're making your mortgage payments to. Tell them you're having a hard time. Ask for a loan modification. And typically what they do during this process is they want to see your current income, your current assets, things that you have today that show that you are having a hardship. And sometimes what these lenders will do is they will give you a reduced payment. Sometimes they'll do a graduated payment where maybe they knock off, depending on your payment amount, obviously, maybe $500, maybe $1,000 for a year. And then they increase it $250 or $500 at a time to get you back to where your original payment is. Now, this isn't a one size fits all, or you heard your cousin or your coworker or someone who got a loan mod and they got some insane interest rate. This is a case-by-case scenario, and every single servicer is going to handle this differently. So you have to be able to work with the company that you're making your payments to see how they can best help you stay in the house. This may take multiple attempts. This may take a few phone calls, and it may not be an easy process, but don't give up, because again, you don't want to lose your house if you can get through this process with your lender. You may have a few months ahead of you before you face foreclosure, but I can tell you, do not wait until the last minute. Get the help that you need as fast as possible, so that way, at least if you can lower your payment, stay in your house, then you can focus on getting back on your feet, finding another job, getting us the other side hustle, so that way you can keep the house. And that way, when the modification period ends, you can afford the new payment going forward. So that's not a popular one. I don't really like it, but it is an option. So you can get a lower payment to keep your property. And here's the hack that you're waiting for. This is something that not a lot of mortgage lenders like to talk about or share, but if you know that you're coming into a large amount of money, whether it be a bonus at work, or maybe you're closing a big deal, or maybe you have some money that you know that's just coming your way through an investment or something, you could do a recast on your mortgage. Every servicer is going to handle this a little differently. So what you want to do is contact your servicer and ask them what is the minimum amount that they want to see to do a recast. This will then tell you the amount of cash that you have to put down towards your mortgage in order for them to re-amortize the loan. So essentially how the recast works is, let's say you owe $400,000 on your house and you're getting a $100,000 bonus at work. You would put that $100,000 down, and let's say you have 20 years left in your mortgage. They would re-amortize the loan with the $300,000 loan amount now, since you put that money down, with the 20 years that's left. So it's going to lower your payment pretty significantly. This is a great way that if you're just risk adverse, you don't want to put your money to work, buy another rental property, and you want to just eliminate your debt, that is a really good way that you can put your money towards your house, pay your balance off faster, and lower your payment without having to pay thousands of dollars on a refinance. And that's also something you have to remember when you do a refinance, because so many people were talking about date the rate, marry the house, and talking about refinancing down the road. When you refi, the average cost of a refinance is anywhere between $3,000 and $5,000. So everyone made it seem like it was a really cool idea to refi, but remember, it's going to still cost you money, whether you pay it or you roll it into your loan and you finance it over the life of your mortgage. Don't just think that you're refinancing for free. No lender is going to do that unless it's some fly-by-night company, but I can tell you everyone's going to charge you something to do a refi. These are 4 ways to help you save money on your mortgage without refinancing. Share this with a friend who's a homeowner who's looking for hacks to save money today. Thanks for watching. I'll see you on the next video.